So we're just running through business expenses now. So a lot of people ask me about kind of tax relief and what it means to kind of claim it back for tax. And fundamentally, I think there's a bit of a confusion between the way kind of corporation tax and profits work to VAT. So when it comes to corporation tax, you never really claim anything back with VAT. If you're a VAT registered business, you do claim the VAT back. But for corporation tax, it doesn't quite work like that. It doesn't usually produce a rebate of tax. It only lowers the amount of tax due. So if you have more expenses than you do income, you've got a loss. And what happens with that loss is it gets carried forward to the next year and set against any future profits you might have. So for instance, if this year you made a loss of £5,000, next year you made a profit of £15,000, before paying any tax on that £15,000, we'll go, hang on a minute, do we have any losses from previous years to carry forward? And go, okay, yep, last year we made a loss of 5,000, we'll take it off of the 15. So this year we'd only pay tax on that £10,000. The only time it would produce a repayment of tax is if you had previously, if you had profits upon which you had previously paid tax. So say for instance, we had £50,000 worth of profits last year. We've now got a loss of £25,000 this year. Only in that case, we can actually carry that back to last year and ask HMRC for a refund of tax we paid last year. So what expenses can we claim? Essentially, expenses can be paid from the company's bank account, or directors can be reimbursed when they pay for them personally. So I love doing this. I love collecting Avios points. So for as much as possible, I always put it through on my British Airways Avios card, and then get the company to reimburse me so I get my air miles. Another thing to note is that it must be wholly and exclusively incurred, so it can't be any personal benefit to you. It must be for the purposes of the business. If you personally benefit, a deduction for tax isn't usually available, or there might be a benefit in kind charge, which is usually best to avoid. So one thing that you can claim is accommodation on business travel. So if you're going for training days, if you live quite far away from your goldmine area and you're going there to view a series of properties and you might stay the night, as long as you any personal enjoyment is incidental and the main purpose of the trip is for business related purposes, you can claim that as a business expense. But it must be reasonable and not excessive. So if you don't usually travel and stay in the 5-star best hotels, you know, the Ritz, then if you were to do so at that one time at the expense of the business, HMRC are likely to challenge that and say it's excessive. Parking, so visiting properties, clients, your accountant, if you have an office or a shared office, parking near that is also an allowable expense. Business mileage, to travel for business purposes, anything that's got a business purpose to it, so viewing properties, training, visiting your accountant. It's important to keep a tracker of all of this using MyLucky or TripCatcher, because it's actually 45p a mile you can claim where you're using your own vehicle for business purposes. So 10,000 miles, that's £4,500, which is going to come off of your tax bill and actually increase your director's own account if you've not been reimbursed that. So that's an extra £4,500 you can bring out of that company completely tax-free. After this, it's 25p a mile, but it's very important to keep detailed records showing where, when, and why you went on that trip, just in case HMRC ever come along and do query this. So also we've got annual events. So if you're a limited company, it's £150 per year per individual, and it can be 2 or 3 separate events or one big one. And this is also a benefit of having a partner or wife as a director, because then you get double the benefit. Realistically, this could be 2 or 3 decent meals out a year, and it's a fully allowable expense for the company, and there's no tax charge on you as an individual, which can be a very fantastic and tax efficient way of taking your partner out at Valentine's Day if you coincide it with an annual company event. We've also got trivial benefits. So these are kind of non-work related gifts to an employee or director. So you can gift it to yourself, because a limited company and you, separate legal people, as we mentioned earlier, legal entities. The conditions are that it must cost less than £50, isn't a cash or a voucher which is redeemable for cash, it's not a reward for work, and it isn't part of the contract. But for director and shareholders of their own business, it's capped at £300 a year. So really, this is just a case of every couple of months, you can just use the company debit card to buy yourself an Amazon voucher, a John Lewis voucher, anything, as long as you can't return that voucher and get cash back, and it's completely tax-free. You can get it's a tax allowable expense in the company, and it's a great way just to pull out a little bit of tax, a little bit of money out of the company and save some tax. If you've got 2 directors, we can double up on this, which means it's £600 a year that we can pull out tax-free and also get a corporation tax deduction for. Mobile phones, so you can get 1 mobile phone per director. It's a fully tax allowable expense in the company, and there's no tax on you personally. However, it must be in the name of the company. So you can't have your previous agreement if you've got a contract phone or a SIM-only deal where you're locked in and you've got a monthly tie-in. That needs to be in the name of the company in order for it to be an allowable expense. But if you own your handset outright, you can sell it to the company, and that will increase your director's loan account because you've sold something to it. So if you've got an iPhone 11 and you sell it to them for say £800, which is realistically what one might be worth, that increases the amount of money that your company owes you, and the company will be able to get some tax relief on the actual handset cost. We've also got laptops and iPads. So these are a fully allowable expense again for the company. You get capital allowances, which in effect result in that it being taken off of your taxable profits. One thing to note though is that unlike mobile phones, a laptop and iPad, if they're significant private use, if you use it a lot for your own purposes, it may give rise to a taxable benefit in kind. Now, I've not got time tonight to run through what one of those are and the implications, but essentially it's usually costly from a tax perspective, so let's try and avoid it. However, to date, there are no cases of HMRC going after people for using the company iPad a little bit too much, but it's just one thing to note. And also we've got the home office. So for this year, it's £6 per week is what you can claim as a flat rate, where you're using your home office, a room in your office for your business purposes. You don't need to keep any records of this, which is great. It's a nice, easy way, and it's a great tax deduction. Alternatively, you can claim a proportion of your household expenses, but this requires detailed calculations of the all of your annual bills, the size of your house, the rooms, how much you're using it for business purposes. Or alternatively, you can rent a room to your company, and this also requires a rental agreement, and there might be some other tax implications, especially around capital gains tax where you own your property. Your accountant will certainly be able to help with this, so just speak with them about getting this set up. A big one we get asked is training. So what training can be an allowable expense? Whereas it's certainly our view that because with property, there's no set barrier to entry. Anyone can kind of become a property investor without going on any of the courses. That property training course is an allowable expense because it just relates to updating knowledge. But if you are spending a significant amount of money on training, we recommend having your company set up and at least trade in with properties, so you can evidence that you are a property investor before paying for any significant property training courses, just so that you're 100% in the best position should HMRC ever come along and challenge these.